Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Daoud, alongside Jason Burak, and today's special guest is Adam Levine. He is the editor and founder of Let's Talk Bitcoin. Adam, thank you for joining us again.
It's great to be here. Thanks for having me.
Now, Adam, with my first question, the Bitcoin price, it's not really that big a deal to me, but we're starting to see these amazing announcements from large companies. You're starting to see Dell Computer accept Bitcoin. I think Expedia, the travel company, is accepting Bitcoin. And I think the most recent news, the really big blockbuster one, is PayPal now starting to accept Bitcoin, at least in some forms. What do you think this says about the long-term future of Bitcoin?
Pretty much things are going how I thought they would. I wasn't expecting PayPal to be so early, to be perfectly honest with you. That's the thing that's really surprised me. But the rest of these, Dell, Expedia, all of these things just make sense. Because you have to think about Bitcoin compared to not a dollar bill, but rather compared to like a credit card system. When you're using Bitcoin, you're using the Bitcoin network and you pay Bitcoin network fees. So the issue is that, of course, the Bitcoin network isn't actually operated by anybody. It's not operated for profit. So those fees are much, much lower. Whereas if you look at literally any other system on the planet, regardless of even if it's just some across the room, there tends to be a fee associated with that because somebody actually has to do that. So that's the thing here is that it makes so much sense. It's like free money when your customers pay you with Bitcoin compared to paying you with credit cards, and that's what all of these things. That's what all of these adoption moves are recognition of. That it's actually better to do this because not only are you not paying the fees, but you don't have any chargeback risk merchant.
Yeah, how much are the fees you said are dropping really more than 90% then in terms of what the normal fees would be associated if Dell was taking credit card payments or Expedia was taking someone's credit card for someone to pay for a trip. It's real free market forces then that are applying. It's making financial sense for them to switch to Bitcoin and accept it then?
And it's a flat fee, too. That's another thing, is that a transaction in the Bitcoin network, it doesn't matter if it's 1 Bitcoin or 0.001 Bitcoin or a million Bitcoin. All that matters is that it is a single transaction, as in, it goes from me to you, Jason. That's one transaction, and the fee is based on the number of transactions. Whereas, again, if you're talking about a credit card company, then you're talking about something that scales, where the more money you send, the higher the fee is, and it's directly proportional most of the time.
Yeah, that's how the banks and credit card companies and, all the people in the chain there have been getting fat off the fees for a very, very long time. And they basically, had a monopoly on this. Because there was no competition in this industry, they basically, whenever there's a wire transfer or I'm sure our listeners out there, when they do a wire transfer, the fees are astronomical for some of those now. And the credit card fees, if you go and use your credit card in another country, they're charging you 4x transaction fees and other things. So it's good to see that Bitcoin is disrupting that and, providing a solution to business people and consumers that lowers costs and makes things more efficient.
Well, I think that you really said it. It's the competition aspect, is that previously there was no competition. So, it doesn't matter which bank you go with because you got to pay the fees no matter what. It's just a question of who you're paying them to. Whereas Bitcoin comes in, and again, it's not just Bitcoin, it's the technology of blockchains in general, comes in and it says, okay, all of those cost structures that you had, those are all incredibly expensive because they require some company somewhere to care, whereas Bitcoin doesn't ask that. So it's just an order of magnitude more efficient simply because you don't have to employ those people doing those jobs.
Now, Adam, let's talk about the competition we have in the cryptocurrency. Now, we have Bitcoin, we have other type of currency like Litecoin, Altcoin, etc. Do you see any other cryptocurrency out there that could compete with Bitcoin in the near future?
I think that they all compete with Bitcoin in a very real way, but it's Bitcoin's game to lose here. Just like Apple could make some bad moves, and ultimately they've got so much momentum behind them at this point, it's kind of their game to lose. It's much the same here. I'm sorry, what was the specific question?
Do you see any other cryptocurrency out there?
Any other altcoins? Right.
Yeah.
So yes, there are other players in the space that are interesting and that are doing things that are different from Bitcoin. Bitcoin and the open source ecosystem of cryptocurrency is particularly interesting because as an open source ecosystem, like if you're trying to compete with Apple, you have to either take someone else's software or you have to, that isn't Apple, of course, because Apple won't let you take their software. And then you have to start from the ground up and build from there. But with cryptocurrency and with things like Bitcoin, the best technology of the industry leader, so the current most advanced version of the Bitcoin software and protocol and platform, is the starting point for anybody who wants to create something better than Bitcoin now, right? So they can just take everything that Bitcoin has been worked on for years and years and use that as their starting point. So yes, there will always be things that are interesting and that are very innovative, but the question is, will they become successful on their own, or are they just interesting and maybe at some point they get rolled back into the main chain? There's a differentiator here too. So people can choose to start from Bitcoin, right? You can, if you wanted to build, MoCoin, then you could choose to take the Bitcoin source and fork it from there and change a few, variables, change the names and stuff like that, and you'd basically have your own coin. But the issue with that is that in the last 4 years, as Bitcoin has been out there and as people have been exploring it and using it and playing with it, we've discovered a lot of problems, frankly, that Bitcoin has that aren't problems when you compare them to the existing banking system. It's like, you would never think that a 10-minute transaction time is a long time to send money from here to Africa. But if you have the ability to do the same thing in 10 seconds, well, in 10 minutes actually looks like kind of a long time. So it's all this like, because this stuff is all open source, what happens is that new technology gets built, it becomes adopted, people see the problems with it, use it as a starting point, build on top of it, that becomes the new platform, and so on and so forth. So right now, we're still with Bitcoin is the primary platform. But there are lots of people out there who have said, well, rather than start with the Bitcoin code, I would rather just make something entirely from scratch, incorporating all those lessons from the ground up and start from there. So yeah, I don't have any specific recommendations for you, but just as a space, the cryptocurrency, cryptocurrency technology is seeing a renaissance of development like I've never seen in anything before.
Yeah, and the network effect is something else because even if these other altcoins may have superior technology to Bitcoin, maybe a better group of computer programmers is working on this other altcoin, there's no guarantee they're going to be able to market the technology and convince people to switch. And Bitcoin is the first mover for now. It's had, I think Trace Meyer has quoted this, he said, it's had billions of dollars worth of computer programmers basically doing free work on it who want to see this project succeed, and most of the other altcoins have not had the amount of money put into it in the blockchain technology and other innovations and things like that, and also the amount of time from computer programmers, really talented people who have basically, taken their own time to work on this project.
That's sort of true, but again, if we were talking about a closed source project, then you'd be totally right, and Trace would be totally right. But again, because we're talking about an open source project, all that work that went into Bitcoin, if it's actually in the code base of the protocol, then again, it doesn't matter if the altcoin that's making something new didn't do that work. That work was done by somebody, and it's work that's just as useful for this new project as it is for the old one. The thing I think that's really hard to break is momentum. Once you get people who, and especially with investor momentum, these things are viewed as very, very speculative items. But once you get invested in it, sometimes it's really hard to cut your losses. And so you wind up with the problem that the people who can best explain, like if you're talking about an altcoin that's built entirely on marketing, as opposed to something that's built on actual innovation and improving technology and solving a problem, really, then a lot of times you're talking about coins that are created and brought into existence, essentially, by people who have the largest incentive to lie to you and who are actually the only ones that understand it. So that's really the issue, is just that there's the information is so asymmetrical in this space right now because it combines all of these different areas of expertise that you need to not just be like vaguely familiar with, but also know what you're talking about and be able to smell out the BS when somebody's, telling you that you should spend money on something.
Now, Adam, in a recent interview with Bill Gates, someone asked him about Bitcoin, and he said it's exciting, but he said it won't reach the mass market because of its connection with terrorism and money laundering. I want to get your thoughts on that.
Well, I think that it's never stopped a currency before. I mean, like if you look back through the history of currencies, when people use things, they tend to be used because they're useful. If someone is using something illegal, it's because it's useful. This argument about money laundering and, like drug transactions or illegal stuff always comes up. And it's kind of a funny thing because, again, if you look at the numbers, the most statistically successful currency for use in illegal transactions would be the U.S. dollar, which is de facto, much less anonymous, actually, or rather, sorry, much more anonymous than Bitcoin is. So Bitcoin is not as bad as far as that concern. So Bitcoin is not anywhere near as bad as the U.S. dollar is when you hold it up against that same standard. But people don't really like to do that. They just like to say, oh, well, it's just about that. Now, Bill Gates is interesting. Bill Gates, if you look at the things that he's interested in, he really does like centralizations of power. And so something like Bitcoin is kind of anathema to that. It is the definition of decentralized, out of control. People can use it for what they find it to be useful for. And so people always assume that this means, oh, well, that means people will buy drugs with it or do something illegal with it. But think about it from the other perspective. There are lots of people who are invested in the Bitcoin ecosystem who think that PayPal is a fundamentally evil company. If people within the Bitcoin ecosystem have the ability to say, oh, well, we'd rather not PayPal be able to use Bitcoin, then it wouldn't be very neutral. But that's not the way the system works. The way the system works is that PayPal says, oh, this allows us to 0% for these transactions, where Apple's going to have to charge 2.5% or 3% for their Apple Pay transactions. So without adding any new partners, without making any new additional purchases or having to license any technology, we have the ability to undercut a larger company than us in the same business by a very large margin. So, I mean, that's really, I think, what it is. It's just that the neutrality of the platform means that, yes, of course, you get some of the people who use it for illegal things. But it's like, imagine if you tried to make, paper dollar bills that were called good dollars, and they were redeemable for $1, but you could only use them for things that were good. How could you possibly have a reasonable expectation that those rules would be followed? You have no way of doing that, so why make the rule at all?
Yeah, and Bill Gates's long-term track record for predictions, I mean, after he left Microsoft, it's not been very good. I believe he said publicly many times, he said that there would be no need for people to have more than 100 gigabytes of hard drive on their computers. I mean, we have that now basically in your smartphone, and people are uploading so much data to the internet, to the cloud, and things like that. He basically completely missed that. So, I mean, just because he's saying one thing in public and he's made a lot of money as an entrepreneur and investor doing one thing doesn't mean he's an expert on something else. So people need to be careful, trusting experts, don't put them on a pedestal and things like that. I have a question for you about the blockchain innovation. Mo talked earlier about Mastercoin and Ultracoin. What types of innovations are we going to see based off of the blockchain? Are we going to see smart contracts? What types of things do you think we're going to see in the near future in terms of innovations with this amazing blockchain technology?
Well, again, it's all about that neutrality thing. So it's kind of hard to tell you explicitly what we're going to see, except all of it. I mean, like anything that somebody wants to do, what blockchain technology does at the core, because it's not like you couldn't run one of these yourselves. The difference between a blockchain that's used for many, many things and a blockchain that's specific is that the blockchain that's used for many, many things spreads the cost of that blockchain, the cost of the ledger, the cost of the tracking over all of those participants instead of each person having to run their own instance. So that's interesting, because it means if you want to do something like a rewards program, like we do a rewards program, we're doing one of the first ones using this cryptocurrency stuff. Normally, you'd have to do all of these things from token creation to verification to fraud prevention to making sure that to identification verification, just all of these levels of things that if all you're doing is just distributing a token that lives on a blockchain that is already doing something else, like for example Bitcoin transactions, then it's all basically free. I mean, it basically the cost to start something is like under $50. Whereas normally you'd be talking about, 10,000 as a very low level to do something like this without maintenance costs. So that's the thing I think that blockchains enable most of all, is that anything where you want not only yourself but other people to be certain of a thing. Like if I want to tell people provably that this person who did these actions on this day earned, and was sent this many LTB coin rewards tokens, which is what our project is called, then you can actually do that. And you can look at the Bitcoin blockchain, you can look at that particular block, you can look at that particular transaction and see that it actually happened. And it's without me personally, just a guy, needing to run all of that infrastructure and hire those developers to do that stuff myself. We've been building out systems to let people do that, and that's kind of the thing, is that smart contracts are coming. Absolutely. Projects like Ethereum make it inevitable, but they were coming long before that. And, Ethereum is certainly not the only project that is pushing down that path. But that's what it is that blockchains allow us to set up relationships and to set up relationships that once they're set in place cannot be changed. So this is, again, imagine if the Federal Reserve didn't have the ability to change their policy once they made it. They'd be a lot more conservative with their policy because they couldn't change it. And so it's much the same way here, is that once something goes into a blockchain, it's there. And I mean, like, you can add something later to supersede it. You can say, oh, well, we're going to make a new rule that's going to replace this old rule. But you can't stop the fact that that rule was there to begin with.
So you're saying it would create more transparency, because what we see from the Federal Reserve and from our government and from the large banks and the monetary and fiscal policy from not just the U.S. government, but so many other governments, is just a lack of transparency. There's just so much, lies and stuff like that go on behind the scenes, and insider deals and things like that. What's your opinion on the viability of Mastercoin and Ultracoin, what they're trying to do in terms of put currency trading on the blockchain, put potential stock exchanges on the blockchain? I mean, obviously, the current status quo, so the Chicago Mercantile Exchange, the New York Stock Exchanges, they're going to be probably fighting this, right, because they make so much money in fees. But do you think that these types of companies are still going to make some headwinds anyways into these types of markets and how they can put these technologies on the blockchain?
Yeah, and again, it's one of those things where the first uses will be the uses for people who simply cannot access the existing system. So I mean, like, that's the core problem a lot of people have, is that not everything belongs on the Chicago Mercantile Exchange, not everything belongs on the New York Stock Exchange, and yet some of these, and also, pink sheets are kind of a different thing. They just have a different set of rules, but it still is kind of arbitrary. I think the arbitrariness is the important part to keep in mind. It's that if you can change things at any time, then there's really no reason to long plan. There's really no reason to stay with any bad situation, because, well, you could just change it and then not be in that situation. So I think, again, it's just a fundamental sea shift that needs to happen in the way that people think about monetary planning and about what our economy should look like and who should be decisions. I think that we've seen over the last, I don't know, you could say 10 years or 7 years or whatever, that central planning, and most importantly, small groups of people making arbitrary decisions that impact huge swaths of people generates bad results. And I think that it's systems like Bitcoin, like cryptocurrency, that allow us to get around that. Now, you asked a specific question about Ultracoin and Mastercoin. The other one I would throw in there is Counterparty, which is basically a competitor to Mastercoin that also has a lot of action on it. I think that they have a huge potential. I think that the biggest threat to something like Mastercoin or to Counterparty is actually just the same type of functionality, being able to create what Patrick Byrne calls crypto securities, and to put them out there in a way that people can trade them.
Now, Bitcoin was created in part because a lot of the central banks all over the world are devaluing their currencies, and a lot of high inflation going on globally. If you look at Argentina, Japan, India, and China. So I want to ask you Bitcoin's role in economies where, like Argentina and Japan, where inflation is high. Is Bitcoin being used a lot more lately in those type of countries?
No, I don't think so. I think that what the role that Bitcoin plays in economies like that is it provides an alternative or an escape valve, and it's not a very big one right now in most of those places. Argentina, we have some correspondents down there, and it's definitely a more active scene than it is, in the Western world, just because they have the issue of currency inflation and the issue of instability in their currency is such a more pressing issue on their minds. But you asked what the role was. I'm sorry, I got lost in that one.
I was just asking you, is Bitcoin being used in countries like Argentina and Japan, where currency is unstable, like you said?
It's not being used. It's being more. So the process by which people kind of fall away from their current money is a long thing, right? It's like complex systems can keep going for a long time after the core constituent components say that they probably should have failed, but a lot of times momentum will just keep you going. So no, there's not there's not like a huge rush where like 10% of the country switches over to these cryptocurrencies. But what they do is they provide an alternative kind of means of escape for people who like. If you can think about it like a global opt-out. If the currency of your country is unstable and you are concerned, and you are more concerned about the stability of that currency than you are concerned about the stability of Bitcoin, which is the currency of the internet, then that probably, that provides you an escape path where otherwise your escape path would be, getting as many physical dollars as possible and sticking them in, hopefully, another country.
Yeah, I think in Argentina and in Spain and some of these other countries, it's mostly the tech-savvy early adopters, the computer programmers, people who pay a lot of attention who get most of their news from the internet, don't watch the regular TV and stuff like that. Those are the people who are switching first, and like the older group, the older demographic of people, they're not obvious. I think the older demographic of people, maybe they own some Apple products or stuff like that, but they can't get their mind around, that they can use transactions, they can use Bitcoin to pay and stuff like that, and use their smartphone for so many things. It's a tough sell for right now for many people, but I think as inflation gets worse in those countries, I think and they see that the other people who have adopted are not doing as bad, I think, people tend to copy each other. And then that's when you get that network effect, and I think that's what's going to happen.
Yeah, once it gets to be obvious, then it'll be obvious, and it's just like any other monetary switch. I mean, these things, they happen, it's not an unheard of thing, as far as that's concerned. But, a big part of the issue right now is just the earliness in the process and the lack of tools. So I mentioned earlier that I'm spending a lot of my time essentially bringing some of these tools into existence that will make it easier to do a lot of these things in a user-friendly way. We're not even really to the user-friendly part. I mean, like on Bitcoin, that's where wallets are now. Now, every time you talk to somebody about a wallet, their focus is on essentially amplifying or they don't say that anymore. It's just making it, focusing on user experience and all of that stuff. So to this point, yeah, you're right. It's really been about tech-savvy users, but I think that 2015 is going to be an important year as far as this is concerned. It's going to get to be really easy to do a lot of this stuff. And really, the thing that I think could potentially remain hard is getting dollars into and out of the cryptocurrency ecosystem. That continues to be the single. It was true the last time we talked to Mo. That's the single most difficult and most time-consuming part. And right now, if you want to do it, you have to go through, like, the fastest legitimate way is through, like, Coinbase, and then there's a several-day, like, you buy a small amount, and then they verify you a little bit more. And so it's like a week or 2 weeks process before you can really, have more unrestricted flows. And even then, they want to know identity information from you. They want to know all of the KYC stuff. So it's just that, so like every place that cryptocurrency runs up against the US dollar, it has to interface with the regulatory system. And that is a really, really, really hairy interaction. So at some point, that'll get worked out, hopefully, because the US government will just be like, okay, here's how you deal with this. And that'll be the solution. But until we've got clarity, that's the primary point of contention.
Yeah, we're getting a lot of mixed signals from different government agencies with the rules in New York and then the rules in California and things like that. So it's tough to tell. I don't know if you saw what the Chinese did with Bitcoin, but they tried to ban it completely from their citizens, but it hasn't worked out that well for the Chinese government because citizens figured out how to do it anyway, and those are Chinese citizens who they have like basically a blocked currency. Chinese citizens are not really supposed to be able to take out $50,000 or more out of the country, but people figured out how to do it with Bitcoin, move it to take the RMB, convert it to Bitcoin, move it to Hong Kong dollars, and then they're basically out of the closed Chinese economy there. So I guess governments can put up as many roadblocks or compliance rules and things like that, but I don't know if they can fully shut off the Bitcoin thing, the whole Bitcoin system, as many people have claimed that they can do. There's an economic expert out there called Martin Armstrong. Adam, I'd be curious to get your thoughts on what he said. He said the U.S. government can shut Bitcoin down tomorrow if it wants. Do you agree with that statement?
The U.S. government can stop all legitimate users of Bitcoin by making Bitcoin use illegitimate. That's the thing that any given government can do. And so what you do is you create this separation between people who are willing to use it legitimately and people who are not willing to, or people who are basically people who are willing to break the law in order to use it. And this is not, this is not unique to Bitcoin. This is anything that's outlawed. What you do is it essentially creates a question. Is it worth it to you are the advantages worth it to you to do this thing that is illegal versus not breaking the law? So that's the thing that they can do. And in China, I mean, like Martin Armstrong isn't wrong because they can kill, with big giant air quotes, Bitcoin in the legitimate sense, where then venture capitalists would not talk about it in the same way. The response to it would be markedly different, but it wouldn't go away. Just like when when the U.S. government and a bunch of lawsuits shut down Napster, that didn't actually stop file sharing. All it did was it essentially squished it and caused it to evolve into the next several layers of things. And then a lot of those actually also were squished. But eventually you get to this point where there's no commercialization in it. There's nobody to throw in jail. There's nobody responsible. And I mean, Bitcoin's already most of the way there as far as that's concerned. So, I mean, that's, to a certain extent, that's why it was so important for Satoshi to be anonymous, is because by there being no guy at the top of Bitcoin, there's nobody who you can, lynch when it's time to discredit Bitcoin. And so it's just about normal people.
Yeah, and it would create a black market for incentives, and then it would also potentially move a lot of those venture capital angel investor dollars. They may move to another country that maybe doesn't ban Bitcoin. So I know investors, a lot of them for legal reasons and things like that, the U.S. Still treats investors fairly well in terms of your capital and the legal ramifications you can have for your investments. But if the U.S., banned the Bitcoin and the blockchain technology, you would just start to see those companies, a lot of them, move to Panama, or we're already starting to see that, right? Where a lot of blockchain companies are moving outside the United States already.
Yeah, that's definitely true. We saw the exodus start last year, actually, when this started getting talked about seriously, like there might actually be some sort of official word. We've gotten several official words. They've mostly been contradictory, and just depending on who you're talking to. Definitely. But it's easy to say that. It's easy to say that if the U.S. may outlawed it, then people would just move to a different country. And I've been guilty of saying that myself multiple times. But the reality is that any de facto outlawing in some place where there's a lot of real innovation going on is going to have at least a temporary detrimental effect on the future of the currency. And it's not the long-term future, it's the short-term future, right? It's the price goes down because people are like, oh, no, this is terrible news. But again, like you said at the very beginning of this, and I really appreciate you saying that, the price doesn't matter. It didn't matter when it was at 1,000. It didn't matter when it was at 100. It didn't matter when it was at $1. What matters is that this is really genuinely useful technology that solves a bunch of problems that have been around the world for 50, 60 years.
Adam, with Apple, and when they introduced our Apple 6, they introduced also a new feature called Apple Pay, where people can just use their cell phone to pay for whatever, for groceries or goods and services. And you combine that with the rise of cryptocurrencies like Bitcoin, Litecoin. Do you see the economy becoming a cashless society? I think this is one of the advantages the government sees for Bitcoin, that they can track the transaction a little bit easier compared to cash.
And tax them, too, every single transaction.
Yes.
Yes, I think that you could definitely see something like that, but it would require more information. Right now, there's simply not enough information going out with most of these transactions to be able to see that. That said, people should be reporting, any taxable gains, and also take your losses too. I mean, that's the beautiful part about the way that ruling came down with capital gains, is that you can actually take losses on it too. Sorry, I lost the question again. Got off on a tangent.
Apple Pay and cashless society. Do you think Bitcoin has accelerated moving us along as a society to there?
I think that let's see. I think that it's in most of the. Yeah. Well, I mean, the demographics are, again, Apple is kind of an interesting story, though, because Apple is really, really, really a closed garden, and they really, really, really are trying to be as full service as possible to everybody who's inside their garden. And this action actually is to expand their garden, so it's not just Apple products, but it's actually all of these different things. Anything that uses Apple Pay will now be part of the Apple ecosystem. So from that play, I mean, it's a ubiquity play. It's a move to be everywhere. I don't think that Apple Pay, when you compare it to the PayPal announcement, actually is very compelling. I think that, that Apple Pay, the primary advantage that you have is you can now use near-field communication. You can use the RFID to wave your phone in the vicinity and then make the payment. But it still is over the credit card. So you still have chargeback risks. You still have all the standard credit card fees. You still have all of the problems, essentially, that comes with this. The only thing that it solves is that Apple has your information on file. You no longer have to type it in every time you want to do something. And they're going to allow third parties in. So it's good that they're not charging more for it, which they could have done. They could have said, oh, there's going to be an extra 0.1%, but instead they just got it from the banks. So I think that was interesting. It was very interesting seeing PayPal roll out or announce integration with something that they did not pay for themselves, did not spend any money on. They're going to deal with their own integration of this technology, but they're not running any of the back end. And yet they had, arguably, in my eyes at least, a more compelling value proposition than what Apple announced the day later, which was a much, much more involved product to actually create. As far as the cashless society thing is concerned, that's so much more of a concern if you live in a world where Bitcoin is the only cryptocurrency than the one that I think we're going into. I think the one that we're going into is going to have millions of cryptocurrencies, and not all of them will have blockchains. In fact, most of them will be on, there will probably be a couple hundred blockchains, and most of them will be on those because they'll be the big volume ones that everybody opts into. So it's actually very, very unlikely to me that we would see a pervasive tracking and reporting infrastructure built on the non-consumer level. I can see consumers doing it. I can see, again, like really what this moves us towards is it doesn't make sense. If we push the logic forward, it doesn't make that much sense to have an income tax. It makes much more sense to have just pervasive sales tax wherever you are. Because even when you're paying with Bitcoin, you still are paying sales tax everywhere. Nobody, I mean, so it's a question of where you capture the revenue coming. And I think that, if anything, that's what cryptocurrency can do, is it can show that no, cashless society, that might happen, but that doesn't mean pervasive tracking. You have to get that on the actual transaction side.
Yeah, I'd rather see, Adam, a 2% VAT tax or sales tax on every single good or service we purchase instead of paying income tax. So then the incentives are there in the United States for entrepreneurs and small business and large corporations to invest back in the United States, to invest in research and development, to build factories, to expand, their operations here in the U.S., and that creates jobs and that improves the economy. But that's not the way things are going here, unfortunately. I think the policy from coming out of Washington, D.C., at the federal level, at least, whether it's mostly the Progressive Party, but they want to layer the taxes on to everyone. So we're going to see, the income tax increase, we're going to see dividend taxes increases, and then we're also, like I said, with the cashless society, which I think is from white papers from the people in power at the IMF and other places, they want to layer the taxes onto everything. So they're going to want to put, a 5% national online sales tax or VAT tax on every single transaction, because there's a lot of people that are getting paid under the table in cash, and they want to get access to that underground economy and things like that. I know Europe has a humongous underground economy where it's all cash and things like that, and people are outside the banking system, and I'm sure the U.S. is the same way. And what worries me, obviously Bitcoin is a lot more transparent than most people think, but what worries me is the government can take the technology then and just start layering on the taxes to the point where they could cripple the economy even further.
Yeah, but the thing, sure, so you could go down that path, but the problem with it is that it's a hard path to go down, right? You have to be pretty hardcore in order to actually roll that out, where you're going to take the cryptocurrency technology, we're going to strip out all the parts that make it good, and we're going to add in lots of different layers of stuff that makes it bad, and this is the new money for everybody. Aren't you all happy? I just can't see that argument happening.
I hope you're right.
But the thing is, so what they want to do, stated another way, based on what you just said, is they want to be involved. They want to be a party to all the transactions that happen, right?
Yeah.
Okay. So if that's true, then cryptocurrency, again, provides a pretty damn interesting solution, because they can't be the counterparty in that. So that's the thing, is that, like, if you just had Bitcoin, then it would be possible, in theory, to go around and create a giant registry of all of the public keys or something like that. And I mean, like, if you really wanted to get hardcore about it, what you would do is you would just make it so that so you have a dedicated device and it has one wallet on it, and that wallet is associated to your social security number, and you can only use that wallet. So I mean, like, you could create whatever you want using this technology, but the thing is someone has to actually decide to use it. So in a world that has no alternatives, right, in a world where you can just use dollar bills or credit cards, well, then who cares? You're going to be using dollars one way or the other. But that's not the world that we live in anymore. The world that we live in now is one where there are going to be millions of these tokens, and it's not going to be the Fed that creates them. The Fed might also create one, FedCoin or something that maybe has taxation built into it, and you buy those with whatever your currency of choice is, and you get it back at a discounted rate because you're prepaying your tax. I mean, something like, you can do anything. It isn't what within the existing system is going to work. The question is, how can we make the existing system not so freaking terrible that it actually purpose? And now we have tools to do that, where even 3 years ago we did not.
That's a great point. So, Adam, for people that want to start buying Bitcoin, which wallet companies are the most safe for people to use to buy and store Bitcoin? Do you have any recommendation?
Yeah, so if you're in the United States, the way that we deal with Bitcoin is through Coinbase. It's the largest, it's got the best banking connections out there. They're fast once you get registered, but it's not an anonymous process. They know who you are. So again, it depends on if you're focused on anonymity, if you want privacy, is that the primary thing? Then localbitcoins.com might be a better place where you can just literally find somebody else in your local area who's looking to buy or sell and do a deal with them directly. But yeah, Coinbase.com, Circle.com recently opened up. I think they're still in closed beta, but that might be another one to look at. These are all like the big venture capital backed operations. If you want to deal with somebody else, then there are exchanges in China, there are exchanges in Russia, there are exchanges all over the place, and that kind of is a constant. But the exchanges, again, I really want to emphasize, the exchanges are one of the largest points of risk in this ecosystem because they're the place where cryptocurrency interfaces directly with legacy money or government money, whatever you want to call it. And at that point, that's where the single most dangerous interaction that you'll do, because there's all this reporting and all this information that has to go back and forth.
Yeah, and do you think then we're going to see in the next couple of years, obviously there's been a lot of venture capital and angel investor money go into blockchain-related companies. Are we going to see investable type of companies where a Coinbase or a BitPay are on a major U.S. stock exchange in the next couple of years, or do you think they're going to hold off on those for a while?
I think that venture is kind of all over the place, honestly. There are some VCs that are putting into really what I would call fundamental, infrastructure level stuff, like working on exchanges or, vaulting services, things like that. There are groups that are totally looking at these speculative new cryptocurrencies. Mostly that's not VC. Mostly that's just small, individual, mostly crypto, honestly, going into these new things. It's sort of funny. Bitcoin started off as something that might have fundraised, but you certainly wouldn't have fundraised in it. But now it really has become the de facto thing where if you want to raise money for a project, you're probably, in the cryptocurrency space, you're raising it in Bitcoin.
Yeah, we have a friend, Matt McKibben of BitNation. I don't know if you're familiar with BitNation, but they're trying to get governments who they have either corrupt crony bureaucracy there and they don't have the money to put land registry and things like that on the internet. So they're raising capital now through Bitcoin-related crowdfunding. Or cryptocurrency-related crowdfunding, and they're trying to get African governments and South American governments and Asian governments that can't afford the infrastructure to list land registry and titles and things like that. They're trying to put all these things online on a blockchain-related technology. I think it's a really good idea, but it's going to take a while to sell it to get these governments on board and things like that because of rules and regulations, and they're not probably as tech savvy.
Yeah, I mean, that's the thing, is that people can do anything with this technology. I mean, seriously, once you appreciate the potential for what it means to not have to operate the infrastructure, but to be able to use it fairly and cheaply, basically, if you're a merchant doing something with this, or you use this to create a service, most of the if you're receiving transactions, you pay zero fee. Unlike credit cards, where the merchant is essentially paying, and so they add it to their price, the transaction fee in Bitcoin is paid by the sender. So even there, you take the conventional logic, turn it on its head, and it gives you a different set of things that you can or can't do. The thing that I'm really, really interested in is all of these non-cryptocurrencies, but all of these tokens, right? Tokens that can be created that act exactly like cryptocurrencies because they exist on cryptocurrency blockchains, but they can be used to represent something else entirely. So one can imagine, because anyways, that's a conversation for another time. But to anybody out there who's looking for the absolute bleeding edge as far as cryptocurrency is concerned, take a look for token-controlled access, and specifically counterparty, Mastercoin. You're going to want to look at those things a lot.
Well, we're talking with Adam B. Levine. He's the founder of Let's Talk Bitcoin. So, Adam, if people go to your site, tell our listeners what would they find?
Yeah, absolutely. So Let's Talk Bitcoin started about I guess, about 14 months ago as a podcast, and we're now on our third website, and we've turned into a network. We have 6 or 7 different weekly podcasts on, and my show, Let's Talk Bitcoin, is twice weekly. We cover a variety of perspectives, and in general, my perspective as a journalist is that I don't claim to be unbiased. I actually claim to be aggressively biased towards whatever my beliefs are, and I like to work with people who also feel like that. So everyone kind of wears their politics on their sleeve and just talks about the various things that are interesting to them and their particular shows. I've been very happy with how it's gone.
Okay, great. Well, Adam, thank you for coming on, and come back on again soon.
Absolutely, guys. See you next time.
If you're tired of losing money with your financial advisor, want to ask better questions to your money manager, or would like to learn to invest on your own, Wall Street for Main Street can help you. Our goal is teaching people how to fish for themselves instead of trusting their financial advisor for everything. Wall Street for Main Street offers high-quality investor education, market research, and consulting for beginners, high-net-worth clients, and anyone else in between that wants to learn to adapt to the current macroeconomic situation, profit off of it, or hedge themselves. Please contact us at wallstreetformainstreet.com. That's WALLSTFORMAINST.com for more information. Also, if you love our podcast and website and would like to donate money so you can continue to get exclusive podcasts from top experts, CEOs, economists, authors, and all of our great guests, please go to our website to donate money, go to our Indiegogo page, or go to our iTunes page and give us a great review. We accept donations in fiat currency, Bitcoin, and also precious metals.